Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we're going to just talk about leverage strategy to grow passive income. So I've been talking about passive income on my YouTube channel and now I'm looking for more strategies to really work on that and see how it really grows. So a strategy called leverage is something that has been there in the business world for a while. So many companies use it, even if they are well established and they have those cash capital that they can use to grow the business. So some companies, they still use leverage to really expand or use it to grow some of their new product to reach new customers. So leverage is the topic of today, and we're going to go through one by one. And the reason why we're using the leverage is to really enhance that more growth instead of waiting on our own resources that might be limited. So we're using leverage, using other people's money to grow your wealth. So if you're new to this channel, please subscribe for more video. And if you have been here, thanks for your support. And I really appreciate your support. And let's get into the video. So the agendas of today are going to be many, and we're going to go through one by one and hope that you will understand what I'm trying to pass through this topic of today, leverage. So what is leverage is going to be one of the topic, and the business strategies that uses leverage. And then number two, what is the source of the money that you're going to use for leverage? For example, in this for my own, what are the source of leverage money? Where you're going to get that money? So that one is another one. So more agendas are like, what is the strategy that you're going to use to invest the money? Is it a good strategy? Is it going to make you gain something instead of losing money and having to pay the money you borrow plus the cost of money? So you have to know the strategies that you're using to invest the money, because the risk here is very high. The money is not yours, and if you have to lose it, you have to pay double. Okay, monthly repayment plan. So how are you going to really start repaying back the money? For some people, if you are investing in a business that is going to make you profit right away, and then you can see if it's really worth it. So you can sell the something that you can sell the thing that you are selling, and then now look at the profit that you make, and then also pay back the money that you use as capital and plus the cost of borrowing. Approximate interest paid. So how are you going to look at how much interest you're paying? Because at some point, once you start the business, you always want to keep track and see if it's really working. And if it's working, and then you continue making your profit and grow your wealth. But if it's not working, you better have to reconsider your action of stopping, or maybe do something on it so it can be profitable. So now we can go ahead and talk about what is leverage. So what is exactly leverage? So leverage is borrowing capital to invest in a business or something else that you hope that is going to give you a better return, a greater return than the interest that you pay. So use borrow capital for an investment, expecting the profit made to be greater than the interest payable. So your expectation or what your analysis tell you that the profit that you're going to make is going to be higher than the interest payable. So if that's the case, and then you see that, okay, this is a feasible business and I'm going to do it, and I'm going to make profit, and I'm going to pay back someone else money plus the interest. So that is the leverage. So we have to look at the businesses that actually use the one that use leverage. So, like for example, when people want to buy a house, so more majority of people here in the Western world, they do not have cash to just go and pay for the house, and all of a sudden they own the house. They purchase house through mortgage, and this is done through leverage. So if you don't have the money, you come to the bank, you have a good credit, you have maybe a little bit of down payment and stuff like that. So you purchase the house on mortgage is an example of using leverage. You're leveraging on bank's money. It's the bank that are not paying the seller, and then now come and amortize that, do the amortization on the house, on how you're going to pay back their money. So they will now charge you the interest, charge you all the stuff, and then plus all those things and calculate and see how you're going to pay it over time. But what is the benefit of you paying mortgage? And this point will now tell you how you have leveraged the bank money to make your own money. Like for example, your value of the house can increase, which give you equity. Number two, your mortgage payment can reduce over time, which means you might you will be better off than someone who's paying rent, because with time the rent increase, and because of growing economy it keep increasing, and you might end up not affording it anymore, and you can end up having a big financial trouble. So the buying a house is one of the example of leverage. Another one is people who invest in paper money like the stock market and all these things. They also use leverage. So when they're using the leverage, it's like if they have $100 or $1,000 in their account and they want to buy more shares or more stocks, and then the broker can lend them money for them to use so they can make their trade. Once the trade is through and they have made the profit, they pay back the broker, and then cost of borrowing, and then now keep the rest. So that's another way of using leverage. So like, for example, in this picture, so someone has only $1,000 in the account, but they want to buy shares that are worth 10,000. So they leverage 9,000 from the broker. So the broker give them 9,000 so they can do their trade. Let's say, for example, these people knows their stuff and they know how this thing works, and they're making profit out of it. So they end up like making 20,000 in the hand, and then now pay back the broker 9,000 with the commission that they had to pay, and then they remaining with the 9,000. So they are really better off than someone who have not done any kind of leverage or try to do any kind of leverage, because they think, oh, they cannot afford, they have to work for it for life, and it might take you lifetime without you getting to that point, because resources are limited and our wants are unlimited. So every time you have something that you're using your money on rather than like investing. So if there are alternatives like leveraging, and then you know that you will know how to manage risks and not lose anything, and then it's a good way for you to go with that. Another ones are businesses that are to start on leverage. So you have 10,000 business that is ready to be sold, and you want to get that 10,000 business, but you don't have the money. So some people will go to the bank and get the credit and then buy the business and do the merchandising, merchandising, selling their stuff, and then later on pay back the borrowed money and remain with the money that they have made. So this is another example of the leverage strategy. Another one is how do you now do the leverage? On our example of how we are going to build passive income. So our leveraged money is going to come from non-annual fees credit card that I already have. So this credit card that I already have, I don't use them in any other things, but I want to use them for leverage so I can grow my passive income account. So I have one, which is Bang on Mature Cashback, which is really good one. If you had to use it for shopping and all the other stuff, you get some cash back with it. But now I'm not using it for any shopping or all those stuff. So I'm going to use it for investment where I can get $1,000 from there and buy shares on the every month. Okay, so Tangerine 2 is 3,000, so CIBC Venture 2,000, Classics 1,500. So this year, the plan on investment this year is going to be all total 10,000 into my portfolio. So is it worth it and why do I want to do it? And I want to keep track of this kind of leverage and see if it's really worth it. So amount of the interest that I'm going to be paying, I will also keep track of that, and any fees, keep track of that. But this one has no fees. None of this credit card has fees. So, and then we see the profit, the shares that we bought at the end of every quarter. So we can make our decision of maybe we should continue or not. So these are the sources of leverage money for our passive income account that we're going to build this year. It's the account is already built, but we want to grow it faster. And then a way that we can do that is through leverage. So that one is that. Another one is like the strategy, the investment strategies that we're going to use. We're going to use the dollar cost average. This is how you take a fixed amount of money and invest it in the account every month, regardless of the market condition. However, you can also look if it's like a bad market condition that maybe you think company is not going to survive, or it has issues and all these things. So maybe you cannot invest in that. But $1,000 a month in the market in any under $1,000 a month under any market condition, like if the price goes up, you still buy, price goes down, you buy more of that. Okay, so you invest every month. So you could be, for example, for me, if I had planned to buy TD stocks this month and maybe the TD stocks price are very up, so maybe I can buy another stock that I'm interested in whose prices have gone down. So that one can also help too. So it's a dollar cost average that we are going to use in this strategy. And what are some of the different industries to invest in when it comes to stock market and then like passive income account? So number one is financial sectors. So I love financial sectors because it's a stable sector when it comes to Canadian economy. For the US, it's different story, but in Canada, they are the stable sectors because they are backbone of the Canadian economy. Energy sectors is another one. So energy status, and then REIT. REIT are companies that invest in they invest in real estate, and then people who invest in REIT, they get payment every month because the monthly rent are paid monthly. So once you invest in REIT, you get your monthly payments. Okay. So another more of the different industries to invest in. So some of them are like things like utilities, things like telecommunication, and then ETFs, all those stuff. So they are required for your portfolio to be well diversified. You have to spread all of the different industries, which is good because if the financial sector is affected, you can make back your money through ETFs. if the ETF sector is affected, you can make back your money through energy sector. So in this case, you are secured by being diversified. So diversification is not like buying different stock or shares from one industry. So if you're buying from one industry and then you're not diversified, so you have to spread it over different industries, because one industry what affect one company can affect most of them sometimes. So ETFs, utilities, all those stuff are the industries that you can look into and see what are some of these companies that best suit your needs. Another one is monthly repayment plan. So I plan that every month I can pay back the minimum of 150 to the card that I'm using, because I have to use one card at a time. So that's the plan. And another one is the interest paid, the approximation of the interest paid. But when we get to the end of March, God willing, so we'll see exactly how much you could pay as a minimum payment, which is the interest on the $1,000 balance, and then we see how we go from there. We can get new ideas when we know that information, because what data does is when you have the data, you can really make decision on that data. So is it worth it for you to be paying like maybe about $30 for a balance of $1,000? So we'll look at it and see it. What does it give you in the long term? So in the long term, I feel like it is worth it, because you will be getting dividend earnings every month or every quarter, and every year you get capital gain, right? Every anniversary of your stocks or shares that you hold, you get the capital gain. So this is the end of the video. If you like this video, thank you for watching, and subscribe for more videos, and I will see you next time.